morning, everybody, and thank you for attending. Just a quick presentation today regarding our projects. We're based in South Africa, and we've just recently listed on the ASX. We listed January this year on the ASX. Our market cap currently is $29 million, and we hold 74% interest in the Sedibang and Star mines in South Africa. We currently have 4 projects, 2 producing mines. Also, we have a tailings project, which I'll discuss, and a new exploration pit that we're looking at, which I'll also present to you. These mines currently have had about $30 million invested in them, and they were acquired from both Petra and De Beers back in 2009. The management still holds 64% of these mines, and we have a current 12-year life of mine, and we have reserves of 544,000 carats. Sedibang's mine throughput, we achieved 7,200 tonnes in March, which is expected, and we're expecting a target of 10,000 tonnes by June of this year. Our operating model, we have extensive underground diamond operational expertise. How I got involved in these mines is I was looking for projects to bring into Australia. I met the 2 founding partners from South Africa. I was impressed with their in-house engineering capabilities. They've worked for mines all around the world, and they really know how to mine, and they're very good at what they do. So I was quite impressed, captured the projects and brought them back into Australia, and that's how we listed them on the ASX. We have very high resource grades. Star has 80 carats per 100 tonne, and Sedibang has 48 carats per 100 tonne. Most of the diamonds are very high value. We're about 90% or more of gem quality. We're driving volumes and cost efficiencies to help enhance our margins, and we're appraising and looking at other opportunities around our current mines. And the beauty about Frontier is that we have a very large mining and engineering workshop in Kimberley, and most of all the work and all the production facilities are all created in-house. We very rarely outsource any engineering capability, which makes us very, very cost effective. Just a quick look at how we feel about the future of diamonds. We've some information here that global demand and prices have enjoyed a real escalation of about 3.3% per annum over the last 12 years. Global demand is expected to grow at 2 to 5% per annum. And we're looking at, there hasn't been any significant large new diamond mines discovered for many, many years. We're finding a high demand for larger quality gem diamonds, and that's what we're producing from both our Star and Sedibang. We're also finding that the large diamonds are not being cut now. They're being held as currency and as wealth for high net worth individuals. Instead of just holding gold, they're holding diamonds as well. And there's a bank in Singapore now who you can deposit your diamond, and they'll lend you 95% of the value of that diamond back. And we're very well regulated through the Kimberley process, which we need to adhere to. This is our Sedibang diamonds. In the last three quarters, we received an average of $429 per carat for our stones. We recovered 5 exceptional stones during March, as you can see down on that photo there. And the largest stone found was 126 carat from our Sedibang mine. That was in 2007, before we acquired the mines, and that sold back then for $5.3 million. So, and as you can see on the map there, that's our run of mine, what we in part of our March production, which our production has been very low at the moment because we're changing our mining method. We're going from an old antiquated mining method to a new upscale mining method, and I'll explain that in a moment. Our mines are situated in the Kimberley region. You can see there the Sedibang mine and our Star mine. And this is our resource statement. All the green still shows our resource of what we still have available to mine on our Sedibang mine, and also our Star mine. You can see the levels that higher up that have been mined out, but now we have the lower levels. And what we're finding is that the deeper we go, both the quality and the carats that we're receiving as we go further down are a lot more interesting. Our old mining method, as you can see, we had two types of methods. We had the historical overhand stope shrinkage mining method, which means that you would have to blast the roof down and you would get a lot of dilution because you're blasting not only kimberlite material but also blasting a lot of country rock, which would cause, so the more country rock you blast and bring up, the least efficient and the costlier it becomes. And also we're also mining the floor. But also what we found is that these two mines, we have about 800 people working in the stopes, and theft is a big problem. It's very hard to try to control 800 workers a day and search them, and unfortunately we'll find that we're losing a lot of the large diamonds. So hence the capital we're looking that we have currently raised on the ASX and we're deploying is we're changing to this new sub-level retreat method, which basically means that from now on, nobody will be working the stopes. They'll be drilling from the top. The stopes, the kimberlite will be blown down and then mechanically retrieved from the bottom. So we'll have a positive impact hopefully on our revenues and costs because it'll be mechanised. We'll have less waste dilution and so we won't be blasting as much of the country rock. But the biggest advantage of this method is twofold. One, it's safer. And two, it'll also mean that we have a lot securer method of controlling our diamonds. Our third project, like I said, we had the two mines. Our third one is our bulk sampling. We have two over. We've commissioned a new plant that we purchased and we refurbished at the cost of 1.2 million. We'll be using this new plant to both look after our bulk sampling pit and also the tailings retreatment. The plant was designed to operate in dual capacity for both, like I said, the treatment of the tailings and the bulk sample. Processing, we'll be looking at approximately 30,000 tonnes per month of bulk sample material and 90,000 per month of the Citibank tailings, which has commenced. Our kimberlite Bells Bank bulk sampling program, it's an open pit at this point in time. We have had some very encouraging results. The first diamonds are recovered from the tailings sample on the upper levels, and that was just in the calcarised material. So the biggest stone recovered so far is 1.45 carats. We're currently at a depth of 20 metres, and we're still about to do one more blast to get rid of the last bit of calcrete. And the economics evaluation, resource and reserve estimation of the mine planning is to commence shortly. So we're still appraising this. We're about to get into that green zone there, which is kimberlite, and we're looking at some very exciting times of hopefully retrieving some very high quality and high carats from this mine. So outlook, Citibank ramp up. We're looking at 2,600 carats per month in July, and Star we're looking at 2,500 carats per month in September. New mining method to drive stronger margins and greater consistency at both operations. We already have some exceptional stone potentials, offer outstanding revenue upside. Citibank tailings plant commissioning to deliver further profitability, and we have 2.5 million tonnes of tailings sitting on our Citibank mine at the moment, which is very easy. We're just reprocessing it because we've found that the old timers, the technology just wasn't there when they were years ago. They just didn't have the means that we have now, so they've left a lot of diamonds behind. So we're also assessing the Bells Bank economics, and we have some active appraisal of various near-term production assets for sale. And right on cue, I'd like to thank you, and that's all. Thank you.